Hey, everybody. If you're anything like me, you like to use things in your trading that are very simple and easy to understand, yet powerful and provide you good data. In this video, I'm going to introduce you to a strategy. It's actually called the Strat. It is a very visual system that will show you entries, exits, stop losses, all at a glance, basically, and doesn't need any other indicators if you don't want to use them. All right, I'm going to show you how you can use them as a buyer, how you use them as a seller, and I think you're really going to like what you see. All right, let's get into it. The Strat. I like the Strat because it is a very visual strategy. It's very visual in that you can see, it uses the same candles we use all the time, and then it shows you what candles are which, basically, and what you can expect to kind of be happening at a candle, right? So there's three types of candles. They got numbers on them. Y'all have seen the numbers on my charts before. So the one candle is basically inside of the previous candle. And I'm going to show you examples of these. But a one candle is inside of the previous candle. The two candle is either higher than or lower than or less than. Basically, it went out the top or went out the bottom of the previous candle. And a three candle is outside the top and the bottom of the previous candle. Okay, so you got a one candle, a two candle, and a three candle. Let me show you an example of ones, twos, and threes. So you can see this one candle here. I kind of marked them a little bit. The one candle here, right? This is the previous candle you're looking at. Let me turn this to another color. That way we can write on here. So the previous candle, this is the one, right? This is the one candle. The candle before it is higher than that candle and lower than that candle. So the one is called an inside candle. That's what the name of it. It's called an inside candle because it is inside of the previous candle. So a one candle is like an indecision candle. It's the candle where you make no moves. Basically, you don't enter, you don't exit on a one. You basically make no moves on a one candle. You wait to see what happens next. Okay, so you got an inside candle. Basically, it's called an indecision candle. We aren't higher than the high of the previous. We're not lower than the low of the previous. We just chilling out on a one. If you want to enter the candle, you enter after the one to see what happens on the two, right? This one here next to it. And it's got an arrow. Notice it's got an arrow here. This is called a two down. It's called a two down or a 2D, basically, because it's letting you know it's a two candle, but it's a two because it went down below the low of the previous candle. It went below the low of the previous candle. All right. Okay, I'm a one candle. I'm inside, almost like our opening range breakout. And I'm breaking out of the bottom. So you break out at the bottom here of this two. And then once you break out, this could be, if you're a buyer, it could be entry. It could also be a selling place if you're an open closer, right? Or if this is closed, you could also use it for selling. Primarily, I could see where it's used, could be used more so for buying. Because this, once it crosses over the bottom of this one, this could be your entry, right? Entry going down because you're like, well, okay, the candles are showing us that they want to go, that's an R, want to go down. Okay, so it goes down some more, basically down, all the way down to here. Notice we've got a two down, a two down. Both of those happen there, right? Two down, two down. I'm going to show you another paper that shows entries and that kind of thing, so I can erase that. Two down, two down. Then look, after this two, we've got another one, which is another inside candle. Inside these two, the one, it shows a two down, but it doesn't really do what, I can talk about terminology, something called enforce, which basically means, does it close below here? Even though this is a two down where price went down below here, it didn't close below here. The price action went down here, but it closed higher. It closed higher. Notice this candle here then becomes a two up. See this arrow here? This is a 2 up. And 2 up means it went higher than the previous candle. It went up higher than the previous candle. Okay, that's called a 2 up. Everything is based on what the candle was right in front of it. So because this one went up, now this is called a 2 up, another 2 up, another 2 up. Price action goes all the way up to here. Then we end up with closing with a 1. This is today's chart, by the way. This is SPX on the 15-minute. This is today's price action. So a 1 is called that because it's an inside candle. It is inside the previous candle, right? It's lower than the, lower than the high, higher than the low. It's inside of this candle. That includes wick. It includes price action. This candle here is inside of that one. Okay, that makes it a 1. Notice all these 1 candles are inside of their previous candles. This 1 candle over here, inside of the previous candle. That's why something's called a 1. All righty. A 2 is the next one. You got 2 ups. Like here, you got a 2 up. Basically, a 2 up means it went outside of its previous candle in the upwards direction. So this is a 2 up. It went higher than the previous candle's high. This one went higher than the previous candle's high, so it's also a 2 up. This one went up higher. See, now it's still called a 2 up. It went higher than the previous candle, but it didn't close higher than the previous candle. Now that it's red, it's still called a 2 up. So the color of a candle doesn't necessarily dictate what it's called, right? It's totally based on where did the price action go, not based on the color of the candle. Notice you got a green 2 and a red 2. Right? Because this 2 was up higher than the previous one. This one's also up higher than the previous one, but it's a 2, and it's a 2 up, but it's red. 2 up because it went higher than the previous candle. And then you've got this here, 2, this is a 2 down because it's lower. This one went lower than the previous candle. Price action went down below the previous candle. So this is called a 2 down. Still a 2, but you got 2 ups, 2 downs. Now we have a 3 right here. A 3 is what's called an outside candle. It's called an outside candle. Anybody got an idea why they call it that? It went outside the previous candle, so it's higher than the highest, and it's lower than the low of the previous candle. It's opposite of a 1. It's lower than the low of the previous candle and higher than the high. So it's outside of its previous candle. That's what makes something a 3. All right. So we've got 1s are insides. We've got 1s. These are 1s, all inside candles. They're inside their previous candle, right? 1s are indecision. You don't make a move on a 1. You decide what happens on the next candle, basically. Okay. So a 1, we've got no moves. That's our indecision, deciding which way we going from here. Right? And these numbers, the 1s, 2s, and the 3s, or this price action thing works on all the time frames. So whatever time frame you put it on, you decide you're going to trade, you can trade this on any time frame because the 1s, 2s, and 3s will work on, the daily, the hourly, the monthly, all the minutes, the 1 minute, 5 minute, all of them is what's called price is fractal. This works the same on all the time frames. Okay. So on a 1, you do nothing. You wait to see what happens next, right? 2s are generally where you can have your entries, right? 2s is where you can make your entries. Depending on what the previous candle, because there's combinations I'm going to share with you in a minute. 2s are generally where you make your entries and potentially your exits, depending. And then 3s. Now, 3s will trap a lot of stuff inside of it if price doesn't break out of a 3. But when price does break out of a 3, it's going somewhere. Like in this case, when the price breaks out of a 3, right? When the price gets out of here, because 3 is what's called like a mother bar. But when price breaks out of the 3, you know it's going to go a little bit because it had enough strength to break outside of a big candle or a big 3, because 3s are like, they engulfed previous stuff. All of this stuff before it, all of these things here, well, not that one, all of these were inside. These 3 candles were inside of this 3 right here. Right? All 3 of these candles were inside of that. Well, this one looks like it went out a little bit at the top. Once you get a 3, the one when something breaks out of the 3, it's going to keep going. This one here looks like it's barely a 3, but it must be just a 1 cent higher than this previous one. That's how it became a 3. 3 is what's called an outside bar. 2, it's either going outside up or outside down. And a 1 is indecision. You chill out there. Nothing. Okay. There can be red 3s as well. Just needs to be big. The number, the color of the candle is based on, direction, but the number of the candle, here's one here. Here's a red 3. Then the color of the candle is based on direction, but the number of the candle is based on size. So now these are called strat combos, and there's this is sufficient, really. There's a lot of them. So reversals, there's reversals and there's continuations. Reversals, basically, you've got, in this case, a green, and I'm going to show you some of these on the chart even. You've got a green that went up, right? A green 2. Then there's a 1. And remember, the 1 candle where we don't make any movements. And then, this was up. This looks just like up, over, and down. What does that look like to you? A sell zone. It looks the very same. But what this tells you, which is a little bit different than the sell zone situation that we look at, is where do you take entry? It says, okay, the price went up. So leg in, base, leg out. And at the leg out, as soon as it crosses underneath the bottom of that 1 candle or that base candle, that's when you take entry. That's when you enter the trade, right? As soon as it crosses back across this 1, you're ready to going down, you're ready to take entry. It also gives you entry, it gives you the target. The target is the bottom of the candle that you used as your, reversal candle per se. That could be your target. And then there's multiple targets along the way, but you want to look at the first one. And the stop loss, because what's not on this page here is the stop loss. The top of this candle here would be your stop loss. All right, you could use that one. You actually could use this candle down at the top of this one as a stop loss too, but that's one back here is a safer place. But reversals, bearish reversal, bullish reversal, leg in, base, leg out. Okay, just the same thing, but you take entry right after it crosses over that 1 candle. That's where you would take your entry. Then you have a 2-2 reversal. See, this was a 2-1-2, 2-1-2 reversals, right? You can also have a 2-2 where I went up and then I came straight back down. There's no base there. You just leg in and we're going the other way, right? So you went up. Once you cross back beyond that candle, now you're ready to say, I'm going in. The wick will be included. On here, there's no wicks shown on this graphic, but wicks are included. Yeah, because the wick is the price action that goes with this candle. So you would want to include your wicks. All righty. So bearish reverse. Oh, sorry, this was bullish too. So you went down and then it hit something and turned right back around. No base. That's just leg in, leg back out. Like we went down here like that little baby in the little meme that they show where the baby runs in the room and then he turns around and runs back out. Same thing right here. Okay. Then we got a 3-2-2. Basically a 3, leg in, again, base, and then leg back out. As soon as it crosses over the bottom of that base candle, you back going the other way. Leg in, base, leg out. This is a bullish reversal. Right? Here's this one's called, it's got some name by Chicago. I don't even look at that. I just look at the reversals. Green, 1, you got a 3-1-2 going the other way, 3-1-2 going the other way. All right. Similar concept. It went up, turned back. It went down, turned back. Okay, those are reversals. All these up at the top are reversals, basically where price goes and then makes a turnaround. Then you also have what's called continuations or continuation candles, which we've looked at some candle patterns and we know some that are continuation patterns. How do we know this? Well, if you're using the strat, you can say, okay, I was going down, price was going down. It took a pause, which what does it look like for us? What if we use this here? A chair. A chair is still a chair. Yes, a chair is still a chair. Down, over, down some more. Entry is once it crosses back over. So one is a pause candle. Basically, price just paused and took a break, and then it kept on going. Or we went up, chair, and up some more. That's a continuation. You also can have continuation where it just keeps hitting candle, candle, candle. As one crosses the next, then it just continues. No break there. As soon as it crosses over, you can enter on this one, you can enter this one and keep going. Those are continuation candles. The exits for the continuation would be previous candles. For all of these, it's previous candles. So as you hit, we can look at it on the chart and I'll show you. But when you see the candles that are over here, and their wicks, their bottom wicks is where you would see your targets, is where you would have for targets or exits. Okay. Some more reversals. Basically, this was green and then it gapped down. Rev strat, same thing. These are several different combos. I really just try to focus on a couple of them. Just anytime I see a green, then some red, or red, then some green, then that's a reversal. Just look for the reversals because reversals are easier to see for your pop moves. And it may be, sometimes when we're looking on our sale things too, we're looking to see, is this going to keep going? Is this going to keep going? And then you need to just be able to look at some of these candle patterns and say, according to what I see here, it's getting ready to turn around, right? One thing I didn't talk about with the strat is time frame continuity. We've talked about it before. Time frame continuity basically says, what is it doing on the different time frames? Is it on the hourly, the daily, the weekly, the quarter, the 5 minute, the 10 minute, the 30 minute? What is it doing? And if you have the same thing happening on multiple time frame, that's let you know that price is going in that direction. So if you're on the daily chart and you see that the 15 minute, 30 minute, 4 hour are all daily, are all green, you're like, okay, we're going green, right? Let you know that everybody's going in the same direction, right? Let's go back to look at our SPX chart for the day. Okay, so what I see here, look at this one. This was a 2-2 reversal. Price went up, turned around, and went right on back down. Entry would have been right here at the bottom of this candle. And it went down, 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 down. Now, of course, it paused a little bit, but it went down as far as this for that particular day. This is all yesterday. But notice you got all this continuation. Think about what yesterday did. All of these twos, two, it was going in. What would be exits? So what are targets? If you do a 2-2 reversal and your entry is here, right? This was your entry and price is going down. Your next target, you're looking for the bottom of the next candle. The bottom of the next bottom of a candle. So this would have been the target. That would have been target number 1. The bottom of this candle, which it got here, it got there here. This would have been a good place to exit, seeing that price pulled back some, right? They encourage you to exit when you hit the target, go ahead and jump ship. But you come down to here, then it comes to this target and goes back up a little bit. It does turn back around. You see, we got another 2-1, 2-1-2 here, another pattern. Leg in, base, leg out. I know that's common terminology that you're comfortable with, that a lot of people are comfortable with. That was another re-entry or continued entry if you were still in the trade. But this would have been the target. Then the next target is the next candle, the next bottom of the wick there, right? Price went past that one. It got there about this candle. It went just a little bit lower and then turned around. Again, this is a good reason why you close at your targets, because it could turn and do something different. Next target would have been here here, here. That's how the targets are set up. But now if that ain't all happening in the same day. Didn't all happen in the same day. So this was a 2-2 reversal up here. Here is a 3-1-2 we were just talking about. Came in, over, and went up. So what would be targets if you're going upwards? Same thing, right? What would be your targets if you're going upwards? Next one up, next target up would be the next highest wick. I think that one's past this one. The next highest wick would be this one. This would be target. You're looking at previous candles for the next highest wick that becomes target 1. The next highest wick is here. That's target 2. Okay, so we did a little pull thing around, did a little dancing. It finally gets there here. It's both those targets, and actually with this candle goes a little bit higher and then pulls back. Notice how this really closed around the same place as this target. Maybe a little bit higher. It's not exact. Okay, I'm going to change the time frame so you can see that these same things, these same patterns that we're looking at, if you want to go to, I know you want to look at the hourly candles. If you want to do longer time frames, then you can look at bigger time frames to see where would your entry be. Where would your entry be for a higher time frame? Same, we can still look at patterns and see what changes. How do the 2-1-2s and suchies? Let's go look at a 2-1-2. 2 up, the 1 in the middle, indecision. That means we wait. As soon as it crossed below the bottom of that wick, this is our entry. If it had gone above the top, we would have gone that way. Entry going here. Okay, so now entry's there, but stop loss is the top of that next candle. Or you actually could make it the top of the candle you entered on, up to you. Entry going down. This is where we entered right here. Targets. This is the targets. These two candles are about the same, right? You look back, that would be target 1. Price hit past that. Boom, boom. Hit target 2, target 3. We took out a few targets all at one time. Target 4. This didn't get really down to target 5 very well, but it made it through several of these. But look at what happened. 2, 2, reversal. Now, this wouldn't be a full entry for this reversal until it had crossed the top of the candle that you did reversal on. This would be entry right here. It needs to go back above that candle to be considered entry. And then you had a 1 here anyway. Then looks like it gapped up. This was a pre-market gap. It gapped up, but as soon as it crossed back across this number right here, I don't know what the numbers are, but as soon as it crossed there, that was entry for going upwards. And look at what it did through the day. It did pause, pull back a little bit, right? 2-1-2. Then you got another 2-2 reversal. Reverse. Crisscross. Now, you probably would get out by now because this was all the same day. This was the end of the day. This was yesterday starting right here. But let's say we're looking at it and we're looking for our trades that are going to be for the week or for a swing, like over more than one day, right? More than one day. I'm on the daily chart now. How could we use this on the daily chart? Because we don't necessarily trade day trades. Some of us do, but many of us do not. How do we trade this as our option selling trades, right? What would we do there? So here we have, again, these time frames or these combos are useful for whatever time frame you want to use them on. Whatever time frame you want to use them on, right? So these are the daily chart. How would this end? So this ended a 2 down on the day, but this is also a hammer. This is a hammer candle, which indicates that it could want to go up, right? 2. As soon as the next day crossed over the top of this candle, that would be your entry. Now, our entry as sellers could be, we're going to do a couple days, and this could be our put credit spread entry. Right? The next day when it crosses over there, you can go, okay, we're going up some more. Put credit spread entry, going on up a little higher. Target here would be this next candle up, which would be this one, right? That would be your target. And it got right on up there and did a turnaround. So if you entered this put credit spread this day, if you're entering just for daily, you would want to say, okay, it did its good movement. The next day, I don't know, I didn't look at the timing of the end of the week or whatever, but when a trade is ready, but depending on where you think, if you took this entry, let me look at this. If you took this entry as a put credit spread, what would we have picked for a strike? Most likely we would have picked the bottom of this candle. We could pick that as our strike. As our strike price. If you wanted to go way down here, which, we're talking about 56.70, which on SPX, that really wouldn't feel like it was that far away. You really could put your put credit spread strike down here, or you could put it at the bottom of the box, seeing that you entered up here, right? If you had put your PCS right here, and let's see, what are the days for the week? 23. I want to make sure that you would know, of course, you would look at this to see where the days were. The 23rd, this was the 23rd, which you would have entered on. The 23rd was a Monday. But now with SPX, we don't do SPX for multiple days, no way. You either do it for today or your 1 DTE, which you have done this 1 DTE, you would have been able to exit with what you selected, because the price closed up here. If you had selected this price here as your put credit spread strike, it closed above that. Okay, so now we've got a 2-1. Let me see, was this the combo? The 3-2 reversal right here. 3-2 reversal with those two. Now this one you wouldn't have entered until it crossed back below here. 2-2 reversal would have been, I'm doing this going for the next, that's a long wick over here though. Ooh, you'd have waited all day to enter that one. Or then you did the next day, 2-2 reversal, and you would have entered this one when it crossed back across here. I like the strat because it's very visual. You can see I'm looking for reversals. I'm looking for the numbers. I'm looking for time frame continuity. This says that the day, the week, the month, that's what this is. This is a D. The day, the week, the month, and the quarter are all green on SPX. And when you go to shorter or smaller time frames, depending on which indicator, we can talk about which indicator to use. Depending on which indicator you have, then you're going to see that the time frame, it gives you some more time frames. Like now this became the 4-hour. Says, okay, on the 4-hour time frame, we're red. Then you want to go, if you're going to the 1 hour, this one may not show. Some of the, depending on which strat one you have, it goes lower in time frames. I think this one is the Strat Assistant. Yep, Strat Assistant is here. Let me see if I went down to 30 minutes. There we go. I knew there was some more there. Notice how we've got time frames up here. It says the 30-minute is red, the hourly is green, the 4 hours red, the day is green. Hey there, trader. I think I've discovered why most traders are not profitable or are not consistently profitable. And that is the lack of charting technical analysis. Yes, it is a lost art, basically. We're looking at the chart. We see that the candles are going up and down, but not really knowing what is really happening. Everything you need to know, almost everything, like 99% of what you need to know is in that chart. So I've created a training resource that is called Chart Your Way to 100K. It starts with the basics of what is a candlestick, all the patterns, all the things like that. Starts with the basics, and then it goes up from there. It includes candlestick patterns, chart patterns. It includes indicators. It includes what you should be looking at when you're charting, trend analysis, gap analysis, all these different things. Everything you need to go from no charting ability up to being a master charter, you can find in this Chart Your Way to 100K resource training. All right. You can go ahead and grab it at my website, educatortotrader.com. I promise you, this is going to make the huge difference in your trading consistency. All right. Go ahead and grab it. Of course, it matters what time frame you're looking at, so you can decide. You can say, well, this time frame is looking starting to act like it wants to turn around. You're looking at your candles to make sure that it's doing what you want it to do. I like it, like I said, if you were in a trade and the day was going and it was going like this, and you were in this trade and you were wondering if, is it going to breach my strikes? Like, is it going to breach? I've got them up here, but is it going to breach my strikes? And you keep seeing these two candles. You need to either know it's going to maybe potentially, or you need to be waiting for something. Now, if you get here to this one candle, this might make you make you feel a little better. Like, okay, the one candle at least means that it's slowed down. And then a two down lets you know, well, maybe it's trying to stay down a little bit, especially if you had something higher. Now, if you were up in here, you're like, is it coming back? You'd watch to see, does it keep coming back? And these two twos might let you know that it might not be back. It can help you with deciding whether I stay. Do I stay or do I go? Maybe the price had been falling. Maybe the price had been falling and you were like, is it going to keep falling or not? Like Janae was today. Let's go find Janae today. This is still SPX. Janae probably was right in here. This is her 30-minute chart. It came down, boop, boop. It says, oh, no, I'm good. Next candle, two green, two up, and green, two up and green. Means it had some motion it was trying to do. Falling. Two reversal. Going the other way. It helps me a lot when I'm looking at all the trades. Like, let me see what this time frame over here looking like. Or if I'm in a trade and the 15-minute goes red, but everything else is green, I'm like, well, let me just give it a minute. Now, if too many things, if the 15 goes red and then the 30 goes red and the hour goes red, I'm like, okay, well, what we doing here? But if only one time frame goes red, then and all the other ones are green, I'm like, well, we still green. Let me just see let me hold my horses. Let me hold on to my horses. I see some questions, I think, in the chat. Oh, Valerie said, I like that also. Which strat indicator are you using? Okay, let's go look. I'm using the one that is called Strat Assistant. So under indicators, you can put in, you actually can type in the strat. There's several to choose from. They got strat numbers and combos. Lux Algo has a good one. I was using that one for a while. But it's called, mine is the Strat Assistant. Why did I think? I felt like that. I felt like that's it. Oh, is it called Strat Assistant? Let me just type in Strat. Yep, Strat Assistant is the one that I use. Strat Assistant. This other one here has alerts, highs and lows. I just have the first one. FTC means full time frame continuity. There's a screener. I don't look at all those. I just use the one at the top. This Ricky Carroll has several of them that he's developed. This is another one of those things that talks about looking for where the candle closes, because you want to close and then see what it does. But as you decide, like if you decide you're entering, you don't have to wait for it to close to enter. So if you decide you're going to trade it as a buyer and you say, okay, I'm looking at this one, and as soon as it breaks out of this one, I'm going, then soon as it crossed here in price action, then you would go ahead and enter. You wouldn't wait for that candle to close. You'd go ahead and make that move right now, baby. You make the move. This ties in. It can look very similar to the candlestick pattern that we've looked at already. It can look very similar to, again, base, leg in, base, leg out. This is just another piece, it's called something a little bit different. I like that it's visual, right? The number, the twos up and twos downs, that works for me. I can literally glance and say, what is price action doing right now? And then when I see something that I'm looking at for an entry point, I can say, yep, then this right here it's go time. It's go time. Okay, I'm going to show you what I looked at today. This is triple Q, right? Triple Q it gapped down, first of all. So it gapped down here. And this was a 2 down and a 2 up. So really, this right here was the reversal. This was a 2 down, and this was a 2 up. Once it crossed over here, you could enter. I was not entered then. I was on the call with y'all. But that would have been entry right here, right? But after I got off the call, I saw we had a 2 down and then a 2 up. So I entered when it did this. Actually, I was on a smaller time frame. I think I was on a 5 or 10 minute. Let me get a smaller time frame. I want to say I was on 15-minute time frame. So it looked a little bit different. This was the 2 down and the 2 up. Once it crossed here, that was entry. Now I bought a call at this place. Now this was a little nervous because y'all see all these wicks, wick. It did a lot of movement, but those wicks gave me encouragement that we were still going up. I also had the VWAP turned on. I also had my VWAP turned on. Okay, VWAP. So this is the main line of the VWAP. It was riding along, but it couldn't close below. And then finally it decided to move off of here. And it moved on from there. But I took entry based on this 2 down, 2 up candle. Once it crossed over the top of the 2 down candle, then that was entry. We still had some little consolidation. Even though this is a 3 candle, it's still, you see that little doji? Price couldn't pull out the station. And then it finally did. It finally pulled out the station. And then I exited up here. Now, the targets would have been previous candles, but there was a gap to fill. So the top of the gap was the first fill because the gap is going to fill. You expect that it's going to keep doing that. The next target after that actually became this one here, this one, that one, and then this one, and then this one. And it hit all those targets. Then we got a 2-3 reversal. Once you got a reversal, means we reverse. We going the other way. So that means it's time to go. It's time to go. Now, what you could do, depending if you were buying, was say, okay, once we reverse, now this becomes entry going down. Ride it down some more, boom, 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 and it came right back down to VWAP. And VWAP would be another trigger for a target for exit because the VWAP is a place where it may bounce, and it did just that. Bounce back up. Y'all see what this is up here? The first line of the VWAP. It went right up to that 2.0 and then turned around. Came on, it went through VWAP, but notice how it hovered around VWAP the rest of the day. What could we have done from a standpoint of a credit spread? Well, once it hit our bottom, this would be our PCS. This could be a PCS number, and then the top of VWAP could have been our CCS number. Price was just hanging out in the middle of it. 493 could have been call credit spread. 491 could have been put credit spread. And you could have made you a nice iron condor riding out the rest of the day. Yeah, it's free. So somebody was asking a question about the indicator. Stratasession is on free trading view. I just searched for it and it's saying no indicators match your criteria. Okay, so let's go make sure we look again that we call it, make sure we call it what it's called. Just type in Strat Assistant. But even if you had too many on, you should still be able to see this one. Strat Assistant, just type in Strat Assistant. You should be able to see it that way. The top one, Ricky Z. Carroll is the guy. The strat, or this particular one, everybody's here is a member, but this was our last like charting challenge session. This is the last charting challenge session. What is it called on Thinkorswim? So I don't think Thinkorswim has one called the strat. Thinkorswim has some studies. If you do, you'd have to do a search and then install it as a think script. And the think script, it takes a few more steps. It's not as straightforward on Thinkorswim. It's called a think script, and you have to go and add it to the think script. I did it and I have it, but I got to remember what I did. But that's what it is on there. Let me switch screens, or I'll drag this one up there so y'all can see it. And I can see the numbers there. You'd have to do a search. Oh, come on. A search for and I might be able to dig it out. And the web might be able to dig it out and give you the web page that gave me the instructions. Okay, there we go. I should be able to find it. But I have it on here as, when I go under my studies, edit a study, I think it's called Remix, the person who did it, Remix Superlight, which that means, I'm not sure why they named it that, to be honest, because it doesn't have anything to do with anything. All right. Okay, make it full size. And then it populates with the numbers on the candles that think script does that. Populates the numbers on here. And I use the numbers, I still do leave them there, but I can now, because I've watched it enough times now, I can see the 3s, the 2s, and the 1s many times without the numbers. But I know the numbers is a lifesaver, because I can just glance and say, okay, this one's a 1. Or I'm looking at a bunch and I can glance and see, okay, a 1's here. Now I'm just waiting to see when it breaks out of that one. So when I look back to it, I just know I'm gonna look for one thing. I'm gonna look back for it. Do you want me to find that information for you to add it to Thinkorswim? Okay, you're gonna have to go through. I like the 2-2 reversals, and I like the 2-1-2 and 3-1-2. So if there's a 1 in the middle, I like the 2-2s up and down, and I like 3-1-2, 2-1-2.
And then the pivot gun machine.
Oh, let me go and show that other pivot machine gun, because that is an important piece, and I meant to swing back to that. Pivot machine gun is where price has done its climbing, where it's, up. And then, most time, this is what happens when you're trading up and up and up. People who are trading along with that, they're taking and moving their stop up with every candle. Every time that they'll put the stop right there, then they put the stop up, then they take the stop up, then they take the stop up. Right? Every time, that's where they're putting their stop losses. And because the algorithm knows that, what will happen at times, after all these people are riding the trade, then they'll put in some, and I'm not sure how, of course, it's the manipulators, but then this drop will take out all those stop losses. It'll hit everybody's stop loss. Whoop, 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 stop all the people out. And then generally, notice this one here is a hammer, which means it'll stop all these people out, and then it'll start going back up. I'm going to show you an example. It happened today. I think those were cues I was just hitting. Yes, it was. Let's go to a 15-minute chart. In this case, it didn't drop as hard as that, but the same thing happened. So we started here. People would have entered, somewhere around in here. They saw but if they were on a different time frame, might have seen it starting to go up. So you enter, stop loss moves here, stop loss moves here, stop loss moves to here, to here, to here. It gets up here to a 2-3, and look at what happens. 4 candles, drop it right back down and take out all these stop losses. So all those people are now kicked out. This one honestly probably took people out too, because people might have Wherever they entered, they would have been like at a break-even place because you wouldn't have entered to honestly up here. So now you would have been red. As soon as it did that and got back down to VWAP, it turned right back around and went back up. Through all these same stop losses it just took out. It didn't go as high as this one. And then the price did reach to that one, almost to this one up here, reached right back to the same place and then reversed and came back down. So that's where the pivot machine gun comes in. It basically says, okay, you're just, pew, pew, pew. And then all of a sudden something will drop out and machine gun all those stops in a few moves. People here is then scrambling. People who are like, oh, I wasn't profitable. Oh no, I'm late. Oh no, my trade's going red. Oh no, oh no, it was looking so good. Yeah, that's the pivot machine gun.